Hello, I'm Lelda Smits for Australia's Finance News Network, and joining me from the UK is James Turk, founder and director of online gold trading company GoldMoney. James, welcome to the Gold Investment Symposium here in Sydney.
Thank you. It's great to be here.
Now, it's no secret you're a gold bug, yet the price of gold dropped about 30% last year and has just dipped under $1,200 per ounce this month. So why the selling?
Yeah, we do get fluctuations in the gold price. We do that in all markets. But as long as central banks continue to print, and that's what they're doing with quantitative easing and other programs, the gold price will continue to rise.
So why do you perceive gold as a necessary holding?
You know, gold's been around for 5,000 years. It's money that doesn't have any counterparty risk. In other words, there's no one promising the value of gold except the market itself. The market accepts gold for what it is. And it's an important diversifier in everyone's portfolio. So I think everybody should own some physical metal.
And where do you believe the price of gold should be trading?
Well, I think gold is cheap. You know, even though $1,200 sounds like it's expensive, on a historical basis, based on all of my measures, it's still cheap. It's still early in this bull market, and I think gold's going to be going much higher. My near-term target is $2,000 per ounce, and I think we will see that in the not-too-distant future.
So could you put a time on that when you say the not-too-distant future?
It's hard to predict these things. You know, we can't predict the future. All we should do is look what is of value and accumulate what's of value and know that valued assets are going to appreciate in price eventually.
And James, you have just presented at the Gold Investment Symposium, but following such steep price falls, in what state do you currently view the mining industry?
Well, it's been tough. It's been tough for the last couple of years. And usually when you're in a situation like this, that is a pretty good indication that we're at a bottom or very close to it. So I'm pretty optimistic about going forward for the mining shares themselves.
And what are your thoughts on mining shares?
I'm really a gold bullion guy. I don't really get involved in the mining shares per se, but I do believe that the mining shares are undervalued. And as gold goes higher from here, which is what my expectation is, I think the mining shares will go higher as well. But remember, mining shares are an investment, and you have risks of things in the mining shares that you don't have with gold bullion. So they're different things when you're looking at one or the other.
Now, your presentation also referenced your latest book. So what is the money bubble and what makes it unique?
Yeah, you know, people think that what we're using today as currency is money, but it's really just a money substitute circulating in place of money. Money is a tangible asset. Money is gold and money is silver. That's the way it's been for 5,000 years. The bubble has arisen because we think that this paper really is a settlement, something that can be used in transactions, but it's just a convenience. It really isn't money in the historical sense.
And when do you expect it will pop, and what will be the repercussions for investors?
Well, it's hard, again, to predict exactly when this is going to happen. I actually thought 2008, when we saw the collapse of Lehman Brothers and all the problems there, that the money bubble was going to pop. But here we are 6 years later. But we're basically in a financial system that's unsustainable. There's too much debt and not enough wealth being created to carry and service that debt. So my guess is that in the next year or two, we're going to face some very difficult financial situations, not unlike 2008, perhaps even worse.
So James, how would you advise investors mitigate this risk?
Well, you have to, during periods of financial uncertainty, you want to own tangible assets of all sorts. You don't want to own promises. You don't want to own financial assets. And by tangible assets, I mean not only physical gold or physical silver, but things like farmland, buildings, timberland, things that have productive assets. And regardless what happens to the monetary system, these tangible assets will continue to produce wealth, and I think that's the key.
And finally, James, what would you say to investors who say gold has no use or utility, only perceived and imagined value?
Yeah, you know, an ounce of gold today buys the same amount of crude oil it did 60 years ago. That's one of the keys to having a successful sound money. And you know, for the foreseeable future, gold is going to continue to preserve purchasing power. There will be fluctuations from time to time in gold's price, but gold will preserve purchasing power over long periods of time, and that's why I highly recommend it.
James Turk, thank you for joining me on the Finance News Network at the Gold Investment Symposium.
Thank you very much.